Hello, Theo, and welcome to our clients for this, what is February's newsletter, and already promises to be a very interesting year.
Certainly, I think there's a lot of movements around. There's a lot of geopolitical risks. And then this year will be the year in the history of mankind with the most people going to an election. 4.172 billion people will cast their votes, but we can talk about that in the program. But yes, so democracy, more than half the world's population will have the chance to exercise the right and get the government they want, or as some people say, they deserve.
Yeah, quite amazing. So, we've been listening to quite a few fund managers, and like you said, one of the biggest risks that they point out is the geopolitical risk. What is your thoughts on that?
Certainly, there's risks in the world. I think what one needs to focus on is what does markets discount? That means what does markets already know, and what do they say we are pricing that already into levels? That's the one on the one side. The other side is then what will be a market event? Now, a market event can be positive, but it's usually negative. So, almost what does the markets not expect, and what will markets react on? Usually negative. So, if we look at the big flashpoints at this point in time, and I just want to stress this is from an economic point of view or from a financial markets point of view. All of these events are human tragedies. People are losing their lives, people are suffering, people are battling. So this is not in that realm of what's fair or what's not fair, and the human tragic side of it. This is purely from a financial markets point of view. I think we need to keep that in mind. So let's start with the Ukraine. At this point in time, the markets discount the fact that this will be a long, prolonged war. Um, there will not be a quick end to it. But what would surprise markets, what markets does not discount, and what will be a shock to the system is three things. Number one, the markets at this point assume that this battle or war or incursion will stay within the borders of Ukraine. It will not go outside of the Ukraine geographical area. If it goes outside Ukraine, markets will be shocked, and that will be a market event. The second market event will be, should Russia use nuclear weapons? Currently, the market says it will stay, but it will not use nuclear weapons. Nuclear weapons by Russia will be an event and will shock the market. And the third thing is, the markets say that the NATO forces and the Russian forces will not come into direct contact with one another. So, should the Russian forces and the NATO forces some or other way get into direct conflict, that will be a shock to the market. Apart from that, the markets currently assumes long drawn out process. Let's go to the Middle East. The markets assume that Israel's war with Hamas and whatever's going on there, and I just want to again emphasize this is purely from a market's point of view. It doesn't address the tragedy that's happening there. But from a market perspective, the markets say is discounting as we are now that it will continue. What will surprise the markets, what the markets are not discounting, is any direct conflict between the US and Iran, or between Israel and Iran, because that will create the opportunity or the chance that the US and Iran can come into direct conflict. That will be a disaster for markets. So the markets at this point say that as long as it's the proxies, it is sad, it's a human tragedy, but the markets will be shocked, or it will be a market event if the US forces or any of the NATO forces come into direct contact with the Iranian forces. That will be a shock to the system. Then the markets say that although there will be tensions between China and Taiwan, China is not going to invade Taiwan. Should China do that, it'll be a shock to the system. Markets are saying that North Korea will not invade South Korea. Should that happen, it will be a shock to the system. So the point that I think we need to appreciate is, what does markets discount and what will be a shock on the system? All of these shocks on the system has the possibility to happen. Will they happen? I'm not sure. But let's take one step back. I am sure that even in the Ukrainian citizens are drinking Coca-Cola. They're paying with their MasterCards. They're going on their computers and switch on their Microsoft systems. So these things will happen even in those situations. These companies will still do business. They'll do business throughout the world. And one just needs to be careful to distinguish between good quality investments, good quality companies, and what geopolitical events can do. But I think if we focus on what markets discount and rather look what is the chance of something surprising markets. But then again, we cannot forecast any of these. Nobody forecast this Russian invasion. Nobody forecast the fact that the tragedy in the Middle East will pan out this way. So be very careful. Rather, don't spend your time in forecasting. Rather, spend your time on preparing to make sure that the portfolio can sustain these shocks. And that's rather what I think we should focus on than trying to forecast.
Yeah, and I think that's exactly what we're trying to do with our planning. Yeah. And like you said, surprises we can't predict. The other big theme, as you mentioned, is the elections. And you mentioned the number of people, but it's almost 64 countries, if I'm
Yeah.
correct. So, but I think in our case, perhaps the American and our own elections are the most important ones to focus on this year.
Yeah, I think the one that's easiest to predict is the election in Russia. It's just a question of will Mr. Putin get 115% of the vote or 130% of the vote. That's kind of what, but that's beside the point. Yes, let's focus on the two big ones from a South African point of view. And that is the American election and the South African election. In terms of the American election, it'll be early in November. We're in the primary focus area where the two parties will nominate their candidates. Now, it's again, I don't want to go into prediction. So what I did is I had a look at what the betting exchange platforms. That means where people actually place money, place bets, or hedge themselves, or try to predict who's going to win the election, where there's real money involved, not pundits or media or people with vested interest, but when people put their money on the line and they can win both ways, where does the money go? At this point in time, Donald Trump is the favorite. If this was a horse race, he would be the favorite to win the race. Joe Biden is there in the race, but he's a long shot at this point in time if you go towards the bookmakers. Incidentally, what is interesting, although there's about 20 or 30 people that are drawing money of some sorts, the third highest person in terms of money flows is incidentally a Democrat and is incidentally Michelle Obama, which is very interesting. Um, it is a long shot, but that is the third most bet on person. And I think the logic there behind is given the age of Mr. Biden, if something were to happen or some health challenge or whatever happens between now and November, there's no real Democrat with any kind of campaign going, and I think that's more what it is. But it's interesting. Nikki Haley is sliding back very quickly. She's far behind even Michelle Obama. So I do think that we pretty much, chances are good, it will be again two very old gentlemen. Now the question, if Donald Trump becomes the next president again in America, and I'm going to stick purely to South Africa's economic interest in that respect. I think there's a few things that are important. Well, before we get to that, remember, you will probably ask Vladimir Zelensky in Ukraine to stop the war, to give Russia the land that they have occupied, and because he's no supporter of funding Ukraine. But let's get back to South Africa. The challenge is that his campaign is built around America first, not a global agenda, but an American agenda, which means that the risk is there that he could put policies in place to protect the American economy, to protect the American manufacturing, to protect the American consumer, which means that there is risks of countries like South Africa that exports to the American markets. And it's not only the risk of South African product going to the American market, it's the risk of any other country whose products could be stopped or could be taxed going to the American market will need to find other markets. And there it could impact South Africa's export. So it's not only us exporting to America, it's any country exporting to America, which means that where we have nice export markets in Europe, if countries are closed out of America, they will challenge our markets in Europe. So that is basically the risk. Now, the South African election, we don't have a date. The date that everybody banded around, but it's not official yet, is 22nd of May. But remember, this date can only be announced after the last registration weekend, which is the first weekend in February, because the voters' roll need to close before we can announce the election. So the announcement can probably happen, State of the Nation address, early in February, or somewhere around there. But the date that everybody talks about, it's the 22nd of May. It's not formal, but that's a date. In the South African case, there's a few elements that we'll need to see how they play out. Now, it's difficult to make predictions because you're most likely not going to get it right. The question is, will the ANC get 50%? If they don't get 50%, how close to 50% will they get? If they 2 or 3% away from 50%, they can govern with some smaller parties without having to offer deputy president positions or minister of finance positions. They can run it with on their own. Should they drop to closer to 40%, then more formal coalition negotiations will come into play. And then it's a question of what will they accept and how will they put it on the table. The worst case scenario from a markets and economic point of view is a shocking high result from the EFF. The question is, will the EFF stay a 12% party or not? The markets discount that they are a small 12% party. If they were suddenly go to 15 or 18%, markets will be shocked. Markets will not enjoy a EFF ANC tie-up. Is that likely? Well, I think there's a very small chance of that because that'll hurt both the ANC and the EFF from a governance point of view. So I think that's a very small chance. Will the DA be able to not only do well in the Western Cape, but in the rest of the country? And then a question I think everybody will need to discuss is how will the new parties do? How will Rise Mzansi do from Mr. Zibi? How will Action SA do from Herman Mashaba? And it's a question of how these parties will do. But yes, we will have an election. The election will, as I said, will probably be the date that everybody talks about is the 22nd of May. But at this point in time, the markets discount that the ANC will be close to 50%, might be slightly less than 50%, but that a ANC EFF coalition is a very small chance of happening, and I agree with that. There's an exceptionally small chance of that happening. I think the ASC has learned that it's difficult to govern in coalition with the EFF, and the EFF will lose its role as the spoiler. It'll all of a sudden be in government. It'll lose its whole makeup, and I think it will be the end of the EFF as well. So that's just, but yeah, it's just remember with the election year, from now to the election date, politicians are going to talk to their constituents. They're not talking to markets. Not talking to me and you. And most of the promises that they make to their constituents will not happen. They're simply going to lie. And that is what politicians do to get votes. They make promises that's not going to happen. They know it. We know it. Everybody knows it. Just let it go.
And unfortunately, the market does react to those comments at
The
times.
market gets scared. People don't put it into context. People react to it. But most of those political jargon, political promises, is purely for a politician to. It's for a politician a part of his job interview. He needs to get voted in. He needs to get a job. Otherwise, he's out of a job. And that's why they will tell things that might not be true. Just like, unfortunately, we find in high-profile people sometimes lie on their CVs. A politician's major role is to get elected, and they will do anything in their power to get elected. That doesn't mean anything they say will ever become policy.
Interesting times ahead. Then, Theo, we get quite a big question from clients. that they hold around the JSE. A lot of companies have started to delist, and they worried that it's becoming too small of an investable market to invest in. So, is it something to be concerned about?
Well, it's certainly something that's not ideal. It's something to keep an eye on. It's not only a South African phenomenon, it's powerful markets like India, which is actually in a booming phase. Most markets in the world at this point in the cycle are getting companies that delist. So, unfortunately, that's a global trend, and we're seeing it in South Africa. But we're seeing it in other ways as well, where companies believe that the JSE doesn't value the value of the company properly, and somebody else will come and buy out the company and say, "Look, I can pay 50 cents for 1 rand, and I'll rather take it private. Why should I then share it with the rest? If I can pick up the company for 50 cents in the rand, I'm going to do it." So that's the one reason. The other reason is markets go through cycles, and these cycles mean that there's certain times where entrepreneurs or businesses have access to capital from investors, and there's certain times in the cycles where they don't have access to capital, and then they delist. Um, so it's a global trend. From a South African investor perspective, I think we need to keep a few things in mind. Number one, remember our biggest, the JSE top 30 or 40 companies has always made up 95, 98% of the market cap. That's always been the case and is still the case today. If you take the top 10, 20, 30 companies, you way past 98 odd percent of the market cap. So those other small companies, the other, let's say, a few hundred companies, makes up 2 or 3% of the total market cap. That's the one thing you have to realize. The second thing is we lucky in South Africa in the sense that our biggest companies that are listed in South Africa is actually massive international companies. If you look at Richemont, if you look at the whole Naspers process, if you look at our big mining companies, they're international businesses. They happen to have a listing in Johannesburg. They happen to be listed in the local market, but they're big international companies that do business worldwide. And then remember, South African companies at this point in time can invest not 50%, but not far off 50% international. And most of them are in that space. So if you invest in any South African fund, um, a major portion of their investments will be offshore already. But number two, those companies that are listed in South Africa, like the Richemont, the Naspers, the big mining companies, they're actually international companies. So it's not ideal. It's not great. We should definitely keep an eye on it. But from a long-term investment perspective, it will be a major issue of some of the big major companies, the Richemonts or the Naspers process, or the big mining companies, if they were to delist over a period of time and there's not alternatives coming into that position, that will be a risk at this point in time, given the fact that one can take offshore money in your private capacity, either the annual travel allowance or with specific approval from the Reserve Bank and the Receiver of Revenue, the 10 million rand that you can take out. That on the one side, with the fact that local funds are the exposure to international markets is 30+% at this point in time. They can go a bit further, but it is all between 30 and 40%. So it is an issue, but it's not that big an issue. But Yolanda, let me ask you, just to come back to you. We've talked about all of these variables, all of these challenges from an advisor point of view, from a Galileo point of view. How do you discuss this with clients, and how do you frame that conversation?
I think in our conversations and even in this newsletter, we always try to give clients a sense of where the market is, where it's been in the past and where we are now. It's very hard to predict where we're going, but we have a sense perhaps of the trajectory of where we're going. But questions like where does the rand go this year is impossible to answer. But perhaps over a longer term, and if you frame it over a longer period of time, then you can get the trajectory right. So I think clients want certainty, and we all, as humans, want certainty, and that's the one thing we cannot give. But that's where I think it helps to have a financial planner to use as a guide. through tough times, but also through the good times. Because when we have, and hopefully we get that again, 3 or so years in a row, that's very good. Clients then want to increase their equity exposure always. And then to try and rebalance and make sure that they stay in whatever strategy is correct for them can be quite a difficult discussion as well. But because we forget about bad times when it's very good. So that guide, I think, is a very good thing. And then one commentator talked about that there's no miracle medicine that can help you to make good financial decisions. Nothing that can help you to get over fear of that panic selling or of that fear of missing out. So emotions, of course, aren't good or bad or right or wrong. They just are. But one way to protect ourselves against these or irrational or wrong financial decisions is to automate most of the decisions that you can. So, for example, if you are saving, then put in place a debit order. If there's something that a withdrawal that you're going to make, try and put a future dated payment on your bank account. Because when you discuss this with your planner and say you want to go on a big holiday, we bring all the baggage with us. So, what about the rand, the market movements, political things that are happening around the world? And it takes so much effort and emotional strain to make that decision. And then, when you have to make the payment 2 or 3, 4 months later, you bring all of this in again. So, by automating these kind of things, you can bring around a lot of peace of mind and then do the things that you actually care about.
Yeah, having said that, Yolanda, if you look back on a balanced portfolio, the stock standard, our house view balanced local portfolio, if you look over 1 year, 3 year, 5 years, it did what we hoped it would do in terms of growth versus inflation. Even last year was not a bad year. And if you look at the valuations on both the local bond market and local equity markets, chances are good that again this year it will do what one hopes it will do. And that's the way portfolios are structured to perform in line with the expectation of what we hoped it would do. And in the end, if you look back, a well structured, well thought through, balanced approach actually in the last few years delivered exactly what was expected. But let's go back, Yolanda. We now in February, and February for investors is a very important month. Just quickly, what's your advice, and how should we approach February?
Yeah, so it is the end of the tax year. And if you haven't automated your payments and you need to still and want to still contribute to your retirement annuity or tax free savings account, now is the time to do it. And I know that February has an extra day, but please try and do it a bit earlier rather than later because the companies get quite overwhelmed with these kind of payments at the end and they stop lump sum payments before the end of Feb. So just to be safe, just to try and do it earlier, please.
And then talk to your advisor if you're unsure what the best advice is.
Absolutely. Oh, Theo, thank you very much. It was a very informative discussion and lots of info and pieces of thought to take forward. Thank you.
Yolanda, thank you very much. And can you believe it? 1 out of 12 months is gone. I think the message in there is make sure you do the best and you enjoy every month. All the best.
Absolutely. Thank you.